This content is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained on here constitutes a solicitation, recommendation, endorsement, or offer by Draper Goren Holm or any third-party service provider to buy or sell any securities or other financial instruments whatsoever. And we have a kick-ass media partner, Blockchain Radio, where the audio basically circulates onto their network after this. And you can also find the recording on our YouTube channel, Draper Goren Holm's YouTube channel. And today's topic is a very big one, a very important one, as it's creeping up, if I'm not mistaken, in December. And we're talking about Ethereum 2.0, right? Before we dive in, I kind of want to have everyone introduce themselves. Austin, let's start with you. We'll go to Douglas, Shailee, and Taylor. Oh, you're muted.
Of course, I just muted myself to start talking. Yeah, so I'm Austin Roberts. I am the CEO and technical co-founder at Open Relay. We build blockchain infrastructure. So we started off with an open source 0x relayer, and we have moved on to building an Ethereum gateway that based on entirely open source tech for scaling up and building operationally manageable Ethereum infrastructure. So that's me.
Awesome. And just as a disclaimer, Draper Goren Holm is an investor in Rivet. So just to put that out there. Douglas, go ahead, take the stage.
Hey, how's it going? My name is Douglas Horn. I'm a longtime developer in the blockchain space for the past 2 years. My main focus has been on Telos, which is a Satoshi model launched mainnet that launched in 2018. For the past 6 or 8 months, it's been the #2 blockchain in the world in terms of transactions per day on Blocktivity. We have a lot of great things. No one's really heard of us. But I'm very excited about the transition to Ethereum 2.0. I've never been a Ethereum killer type thing. I think there's a lot of blockchain space. So I'm excited about talking about how all these things can work together and build a really cool future.
Awesome. Thanks for being here. Shailee.
Hi, everyone. Shailee Adinolfi. I'm with ConsenSys. I do business development globally, do a lot of work on central bank digital currencies, digital assets, both on the institutional side and the DeFi side, a little bit more on institutional. Have been in the blockchain space for 4 years now, mainly doing advisory and business development. I'm looking forward to the conversation.
And last but not least, Taylor, go ahead, take the stage.
Hello, my name is Taylor Monahan. I am the founder and CEO of MyCrypto. I have been building wallet things for Ethereum since Ethereum launched in 2015. Yeah, and I think that I am just most personally interested in looking at the space from the user's perspective and understanding where those challenges are. I have lived it, like front and center. I'm wildly aware of how many things that can go wrong, and I love to talk about the exciting things that are coming up in the future and how we can make sure that everyone is as safe as possible.
Awesome. Well, we have a really kick-ass panel tonight, everyone each in their own respective domain expertise. So Ethereum 2.0 is on the horizon. It's why we're all here, and obviously to kind of better what's in store right now for Ethereum. So I kind of just want to start from the basics, okay? What's going on with Ethereum 1.0, right? I don't know if that's the official term, but Ethereum right now, that's requiring the upgrade of Ethereum 2.0. And I'm just throwing this question out there, and I'm hoping someone can kind of take us through like the pitfalls of Ethereum right now that Ethereum 2.0 aims to kind of tackle.
Sure. I'll take a stab at it, and then everyone can correct my mistakes. So Ethereum is a proof of work blockchain launched in 2015. There is, I've been mining it almost that long, so I'm pretty aware of what the issues are there. There's a maximum capacity essentially on Ethereum. Currently, the ETH1 blockchain of about 1.3 to 1.4 million transactions per day. Beyond that, it just doesn't get It just doesn't go anywhere. And what happens when you reach that capacity is you get backups in the mempool, which holds unprocessed transactions. You get there's an ability to sort of pay to play, to jump in line in front of others with higher gas prices, which is a problem when you look at like financial transactions and things like that. And so for a long time, from the very beginning, really, Ethereum knew that they had to migrate past this. It's a big project, right? And they have to basically migrate. They have to fix the plane, rebuild the airplane while it's in flight. So the plan since about, as I recall, around April 2016 was to move to this ETH2 platform, which would be a sharded black platform, which means that there would be a number of different shards. Each would be its own blockchain. And it would have a little bit more, it would have more capacity, about 9 times the capacity of the current blockchain, because the blocks would be larger. And they would all be bound to this sort of central blockchain called the beacon chain. And that whole thing is called Casper. And it has 3 phases: phase 0, phase 1, and phase 2. Phase 0 is what we're just entering now. Phase 0 is really sort of like just tuning it up, making sure everything works, investing ETH from phase 1. Or from ETH1 onto the blockchain, at some point, you can unlock phase 1 where we actually are using the ETH2. And then phase 2 adds the sharding and also the EWASM. So it's a expansion of capacity that's going to, I know there's a lot of words and we can talk about whatever people want, but basically, big picture, it makes it bigger, faster, stronger, but much like the coronavirus vaccine that we're all super excited about, there's a lag between when these developments come out and when they actually start having a positive impact on people's life.
I love it. And Douglas, you mentioned how we're basically trying to upgrade a plane that's mid-flight. I think that's a really good way of putting it. Shailee, do you know how many people are actually contributing and trying to, I guess, put together this grandiose show of ETH 2.0? I guess within the Ethereum Foundation, individual contributors, is there a number?
Well, I don't know what the number is, but we have at least 60 people, I believe, as a part of the Pegasus protocol engineering team at ConsenSys working on this. This guy, Ben Eggington, he's amazing. He's doing a lot of he's the leader of the Pegasus team. And he should have been on this panel, so I apologize that he wasn't able to do this, but there's that team. Then there's the Prism Labs, Prismatic Labs or something like that. They have a team called Prism. Then there's Lodestar, and then there's Lighthouse. And we all contributed along with Pegasus. There were 4 teams that worked on Madala, which is kind of what's happening here with phase 0. And there were, I think, like 650,000 Ether and 20,000 validators that were involved in the Madala test before phase 1 starts. And you can look up what's happening with Madala. I think so far it's going well. I mean, I don't know what the issues are there, but I guess going back to your question, issues with ETH1 are gas prices, congestion, sustainability from a energy consumption standpoint. And so even in the early phases of phase 1, the early stages, I guess, we're supposed to see a lot more efficiency in transaction times and energy consumption. So that's going to be huge win. And also, I mean, I guess what's happening on ETH1 is that what's happening in Quorum, and I hate to take up so much time, but Ethereum, the private Ethereum work that's happening has been extraordinary on the institutional side. And it took time to get institutional players to understand the value of mainnet. And now that a lot of them see it, and they see that the congestion with ETH2, the improvements that are being made, I think we're gonna see just an explosion of activity once that happens. So next year is gonna be a fantastic year for us.
I see you nodding your head. Do you wanna add to that?
I think everyone's brought up some like really great points. I also want to just like one super small thing is that when like before Ethereum launched, that Vitalik got on stage and made to all of us in like the darkest part of the bear run of 2013, 2014 was proof of stake. Like that was a huge selling point. And it was more than just like Casper and sharding and like words, right? It was more about the fact that we have Bitcoin. Here's what Bitcoin does. Here's what Bitcoin does well. And here is this level up. And I think a lot of people saw it as not just another coin or not just another network, but truly like an evolution in blockchain technology. And so fast forward, it's now 2020, you know, and we're still making our way towards that goal. There's been a lot of hiccups along the way, obviously. But, you know, what is being built is, I mean, like for me, at least, when I was first learning about proof of stake back in the day, what it promised was huge, right? Of course, it's going to take longer than expected to get it right. And that's especially true when Ethereum as a network and as a coin have grown in value so much. Like we need to be uber careful as we move forward.
Yeah. So you name dropped this buzzword, proof of stake, right? While a lot of people already know what proof of stake is, what proof of work is, for those who don't understand, because this is going to be circulated to many other people, right? Kind of take me through why Ethereum 2.0 is moving more towards a proof of stake and ditching the whole proof of work model behind.
So I think the simplest explanation that I can give, and maybe someone else wants to get super technical and follow up, but at the most basic form, Bitcoin is proof of work. It means that you expend energy and that secures the network, right? If someone would want to like literally hack the Bitcoin network, they would have to expend so much energy that it wouldn't be cost effective to do it, right? They would have to spend more energy than they would make in the hypothetical stolen Bitcoin. So that's where we are right now. And then over the past few years, we've seen some sort of alternatives come out. There's a lot of like things, just a lot of words, right? Proof of stake, as I guess Vitalik and Ethereum 2.0, as Vitalik saw it and as Ethereum 2.0 is going for, is instead of expending energy, like instead of like putting your work where your mouth is, you're gonna basically put your money where your mouth is. And so instead of securing the network with work, you're gonna secure the network with money, which kind of makes sense because the only reason work secures the network or energy secures the network is because energy costs money. So we're just gonna skip over that energy expending bit of it. And then obviously maybe someone wants to dive into this, but theoretically, there's a lot of like reasons proof of stake is harder than proof of work. And there's a reason we didn't start by just securing a network with money.
Got you. Anybody want to kind of contribute to that?
I mean, I can add a few notes. I'm
Yeah.
maybe not the most qualified here to talk about it, but you know, one of the fundamental challenges of starting out with proof of stake is how do you have that monetary value to begin with, right? So with proof of work, anybody can buy a graphics card. So you have this, or maybe now you need ASICs in some of the proof of work blockchains, but you know, anybody can go out and they can get this hardware and they can get involved and they can start mining the coin, and you don't need anything from anybody already involved in the network in order to get started. With proof of stake, you know, if you were trying to bootstrap a proof of stake network, where did the value of this token come from? And you know, if you start off by creating a whole bunch of it so that you can have enough people who have stakes, then anybody who wants to get in and join this proof of stake network has to do so by buying it from the people who already have a stake, and the people who already have a stake have to give up some of their stake in order to get in. So you know, starting out with proof of work and then transitioning to proof of stake, I think makes a whole lot of sense for a project like Ethereum, where you're not necessarily, or you can handle that initial distribution of the currency and with essentially this permissionless way in where you don't have to get anything from anybody who's already involved in the network, to the point where, right now Ethereum is so widely distributed that anybody can, get it without having to, worm their way into this select group of people who have the thing that you need to get started, right? There are certainly plenty of other technical challenges. How do you identify? So one of the things with proof of stake, and you're securing it with your money. So that means you put down a financial stake, and if you cheat in one way or another, that gets slashed. So then you got to be able to define all the ways that people can cheat in a much more thorough manner than you do with proof of work. So with proof of work, if you cheat, people reject the block. You move on, except that there's some ways that you can cheat where, like, if you went back several blocks and you had enough hashing power to recreate several of the blocks and remove one of the transactions that you wanted to undo, that's valid under proof of work. And, we've seen that in like the Ethereum Classic blockchain. They've been dealing with, back in July and August, they dealt with several, what they call 51% attacks, where an attacker literally came in with more hashing power than the entire rest of the network put together, and they undid some stuff. So you got to come up with all the different ways in proof of stake. There's this concept of absolute finality, where there's this point where you cannot go back further than this, and that's great. But that means you got to come up with all the possible ways that somebody can cheat if you're going to be able to prove that they cheated and slashed their stake because they cheated. That's really where a lot of the complexity comes from, is not just how do you do the initial distribution in a way that's fair and doesn't require kind of a permissioned entry where you get something from the people who are already a part of this system, but also you have to be very, very thorough and make sure you really understand all the ways that people can try to cheat.
Got you.
Can I add something? I think that we should be aware that each one of these, there are three major ways that blockchains, modern blockchains, are secured: proof of work, proof of stake, and delegated proof of stake. And each one of these has its strengths and its weaknesses. Proof of work is extremely strong if you're the dominant chain. If you are not the dominant chain, then there's a massive amount of proof of work power, hash power available that can be used to, like, basically undo other chains, lower down the value ladder, right? And so what you see is, at some point it becomes, it's most people who are not going to be mining Bitcoin SV or something like that with their ASICs, may want to rent a bunch of hash power and to do a quick 51% attack and double spend some tokens, right? That's a weakness of proof of work. Proof of stake has its own weaknesses, right? The basic idea is that people have so much buy-in that they are not going to sabotage the chain because it destroys the value themselves. That's not entirely proven. For example, like you mentioned, Austin, I mean, Ethereum Classic has been hacked, has been 51%ed many times. So is like Digibyte and some of these others, and not Digibyte, Verge, and but there's others, and they still exist, right? So this idea that sabotage in the network for short-term value is fully protected by proof of stake is not necessarily true. But proof of stake has a huge energy improvement over proof of work, right? Which is something that I think it's going to be an impediment to global adoption at some point, right? And then you've got with proof of stake, you also have the idea that every staking node has to have the computing capacity to run every contract on the network, right? Or at least on its shard of the network. So that means that you're limited by the lowest powered computer, which is currently, the spec is about an i5 right now, that has decided to stake 32 ETH, right? So that's a weakness, and a delegated proof of stake takes that to a different step where where certain nodes or high performance nodes are selected and chosen, right? So there's three basic ways to do it. They all have their strengths, they all have their weaknesses. I think it's a natural progression from proof of work to proof of stake and maybe beyond. But if you're the leader in each one, you're pretty safe. Like Bitcoin doesn't really have much to worry about the weaknesses of proof of work because it's always the dominant value chain. Others do and should be moving past it. I don't know if Ethereum value is so high that I don't know if it makes it safe or if it makes it a target. Probably both at different times. But I think that's something that people don't talk about that they probably should.
Got you. Now, just kind of diving deeper into the proof of stake rabbit hole, right? Is there any way to earn staking rewards without committing a minimum of 32 ETH, right? Is there any way to do that? And like, I guess the sub question is, why 32 ETH? Why minimum? Where do we get 32 from?
Well, I think the biggest question is, coming out of that is, will people do it, right? Because what you didn't mention, Adam, is that those are locked up until phase one launches, which could be, people are expecting 2 years, but nobody knows. And there could be a doldrums area where, a lot have come in, they've been locked, but not enough have come in, and people would rather hold that liquidity, be able to sell it, be able to engage in DeFi, be able to do a lot of things that just draws out the parameter is called minimum Genesis validator active count, the number of nodes, that have to be staking 32. I'm not exactly sure why it's 32. Maybe it's 1/2 ETH per shard. I don't know I don't recall where that came from.
Does anyone know why 32? Anybody in the audience?
Ben told me the response to this, but I don't actually remember. But I can get back to you all.
I'm gonna say it's fancy math and research and models and systems, because it used to be 1,000 back in the day. It was 1,000.
Yeah, they dropped. Right. There's no set mathematics. It's somebody chose and a group of people said, sounds good, and like Taylor says, it used to be a lot higher, a higher amount. But I think these all grow out of a tradition of, we see something like the master nodes were basically, like Dash, Darknet, and then a lot that sort of copied it. Those were a sort of a mixed proof of work, proof of stake model. I think whether they want to admit it or not, if the Ethereum developers had a chance to learn a lot in a real world deployment like that. So that was always like, you had to have 1,000 Dash to have a master node, but it's just a picking of a number that seems to work. And if 1,000 doesn't work, then they drop it. So it's probably arbitrary to some point, but they want to have a minimum amount that you're going to be really engaged, right? They're probably not going to do 1 ETH. That's probably too little. Right.
Yeah.
And Adam, to your other question of, if you don't have 32 ETH or you want to make a smaller investment, there are options out there like Rocket Pool, where you can pitch into a pool of stakers who are going to collectively stake a unit. And I've actually been looking into Rocket Pool recently, because I think there's a possibility that Rivet might get into staking there. Essentially the way that works is you've got to have a node operator. They have to bring half the stake to the table. So if they cheat, that comes out of their stake. And then you've got a bunch of other people who can bring much smaller units to the table. And I don't even know if there's a minimum at Rocket Pool, where you bring that in, and you essentially you provide a certain amount of ETH that goes into some node operators pool, and they stake your ETH, you get part of the reward. There's going to be kind of a marketplace of, depending on how much is available in order to start new nodes and how many people are there wanting to bring the 16 ETH to the table to start the node. So how much of a percentage of the yield of the earnings go to the node operator versus the other people who've brought ETH to the table will be variable. But then that also, to the point that Douglas raised, Rocket Pool is tokenizing the ETH that people put into the pool. So if you don't want to be in there for the next 2 years before you're able to get it out in phase 3 or whatever, then if you've gone through something like Rocket Pool, your reward is tokenized, and you're not going to be able to convert it back to ETH, but you might be able to sell it to somebody else who wants to get in, and get most of your stake back, maybe not all of it. Interesting.
I kind of want to pivot. We've gone into a really deep rabbit hole on staking. Taylor, this one I kind of want to target at you directly. So you mentioned behind the scenes when crypto Twitter discovered Vitalik's contract address, right? He just launched their first validator, right? That it concerned you because you don't think people really understand what's going on whatsoever. Talk to me kind of through your concerns and why it's very different than even a high risk, hot mess DeFi thing, as I am quoting you directly. Take me through your thought process on that.
You are quoting me. So yeah, where to start? So, okay, so I think the first thing we should establish is that right now, if you have any amount of ETH, well, if you have greater than 32 ETH, you can go and spin up a validator and do the things that you need to do. It's not very easy, but you can, and 32 ETH into this contract, and then complicated stuff, but like in a month or so, most likely, you will then start earning rewards on that. However, you don't get those rewards on ETH1. You get those rewards in the future. So it's almost like the best way I can describe it is like if the bank offered you a super special bank account where you put your money in, but you can't take it out whatsoever, and that bank account has a super high interest rate. However, there's some things that make it very different than a bank. Number one is that you really can't get it out. Like I think most bank accounts and most things in life even, there's never like a hard line in the sand, right? Like you can always do something to recover, to undo. You can sue someone, you can go hit them with a baseball bat. Like there's things you can do. And with this, like, no, there's really no way to get it back out. The other thing is that we don't actually know what the quote unquote interest or yield will be on this because it's variable depending on sort of the state of the network. And what that means is that you cannot make an informed decision, like a truly informed decision at the level that I think a normal like investor type would, or a normal person would, making an investment of this size, right? You want to consider things like you don't want to just like throw $10,000 or $20,000 into a hole and be like, well, maybe I'll come back in a few years and maybe I'll get it out and maybe it'll be worth more. You know, like you want to have a little bit more diligence than that. Hopefully, I don't know, maybe you guys are crazy. This is crypto, but ideally, you know, you want to kind of analyze things like, okay, if this is going to earn me, say say 5% a year, is that worth it? What are the considerations? And for every single person, it's going to be different because, you know, some people value that liquidity a lot more. Like myself, a few years back when I was living month to month, liquidity was the most important thing to me because I was living month to month. If any of my money was locked up, that would mean that like I didn't eat, or I ate ramen every single night for a week.
Or the pink drink that you love so much.
If they do have a large amount of assets, for people who do have assets, that liquidity may not be as important to them. So there's just all of these, just so many different factors and so many different things that apply to each individual that it's really hard to make an informed decision. And in my opinion, I don't think that anyone can make an informed decision.
Yeah,
on this right
I do think this is why.
Go ahead, Shailee. I see you nodding your head a lot.
Oh, I was going to say, I think that's why exchanges are going to be the ones to do a lot of the staking, right? It's exchanges, the people that have been in the ecosystem for a long time, some of those early investors, people working in the industry who really understand what's happening, what the pipeline is of potential projects. It's really the ecosystem actors that are going to be doubling down probably, and then thinking about how to make it, how to play with that liquidity for individuals, right? So if you are going to be, and I would love to hear from Rocket Pool on this, but if you are offering that staking pool, then what are you doing to what is, I actually haven't looked into Rocket Pool, although I've heard about it. How is that going to look down the line? What does liquidity look like for some of those users a year from now? Yeah, I think things are going to evolve, but from the outset, it will be just like the old guard, like someone said in the chat, investing into this.
Mm-hmm. Go ahead, Douglas.
I think that like Shailee and Taylor both said, the purely deciding on the monetary income, monetary piece is not really why people are going to do it. So you really need to look at what are the advantages for people to get in early, right? And one of them is the true believer thing. You want, Vitalik put in 1.4 million. It's probably a much smaller part of his his net worth, and he's probably not having to eat ramen to do that. But so it's a small thing for him. But for other people, you got to remember the way this is actually going to work is there's going to be these shards, right? And I'd love to talk about this more. These shards, everyone thinks it's just going to be a massive, big Ethereum 2.0 that's going to be great and operate just like current ETH 1.0, but bigger. But that's not true. Each of these shards is going to be, at the very least, you're not going to be able to compose between them. So at least on a
but over several transactions.
Currently, well, so I'm here to learn just as much, way more than I am to talk. But my understanding is that the Merkle trees, the hashes that are basically moving everything to the recording everything from all the shards onto the beacon network are on a per block basis. So I wouldn't be able to compose, let's say, a DeFi transaction that does some kind of instant flash loan on one chain and then takes advantage of a DeFi opportunity on another chain and then pays that back. It would not be able to close within one transaction. So I think you're probably going to get different shards. You're going to have your you're going to have your Wall Street shard and your Atlantic City shard and your Vegas shard and these things are going to have their own value. So getting in early, getting that foothold is going to be a way to, possibly, plant a flag in the ground on some of these shards, and the validators who are doing the DeFi shard probably are going to make more income than the validators who are doing, less popular shards. And that popularity is because you can do the composability across all of them. I could be wrong, but I think what's going to drive people is the fact they really want to see this succeed, and they want to plant a flag in the ground for what this could become later. Not really looking at whether they're going to make 5% or 10% as a primary driver.
Right, and I'll say for myself, I'm one of those true believers, more or less. And I bought into the original Ethereum token sale, back in 2014 when it was buy it with Bitcoin, and I got in at like 28 cents or something. I don't know, but.
Then rub it in, man.
Well, one of my biggest regrets in life was that I bought $25 worth and I sold half of it when ETH got to $7. I've got enough ETH that I can stake a shard or not stake a shard, but you know, I can get in one of those 32 ETH stakes, and I will. You know, maybe not right out of the gate, because I got to find the time to figure out how to make sure I'm going to manage my node right and all of that. And by the time I've gone that far, I'll probably become a rocket pool validator and stake as many as I can.
I'm gonna put it up to you, Austin, to make sure you did it.
Can I just point out that both you, Austin, and Peter from Gath are like, I would classify both of you as technical people who are totally capable of running your own validators, and yet neither of you are already running your own validators and are like, I don't know if I will, I'll probably take the easy route. And then yet everyone who's like totally not actually capable of running their validators are like, oh,
yeah, right.
Overestimating how the difficulty really.
I do intend to run my own validators. If I go to Rocket Pool, I will be bringing the 16 ETH to the table and acting as a validator for other people too. But that, I mean, that ostensibly means that I get to take a cut of the other people who are bringing part of the shares, and maybe I end up taking a little bit more. Yeah, I mean, I have the technical capability. You know, I run a node gateway service. I can figure out how to do this right. But you know, to one of the other points is, there's a lot of people out there running, or you know, who have essentially committed to staking, but haven't actually figured out how to, you know, run a validator yet. You know, which is a concern. And from my perspective, as a guy who runs a company that runs an Ethereum gateway, runs a bunch of nodes, able to scale up to deal with whatever volume I need, you know, I'm concerned that from my look at the Ethereum ETH 2.0 nodes that are out there right now, I don't see one that looks enterprise ready. You know, like in my mind, if you got to keep your node on all the time in order to keep earning on a regular basis. But at the same time, if you're running 2 copies of your node, then you end up signing 2 messages that end up looking like cheating, and you can get slashed. And if you were going to, you know, avoid both of those situations where you could have both redundancy and make sure that you're never going to sign 2 messages and end up getting slashed, you'd need something like a Raft consensus layer, and none of the clients have that.
No. I can tell. I mean, yes, I think the big picture people are seeing here is it seems very technical. I can tell you. So I ran nodes, full-time BP nodes on both EOS and Telos, and I've been doing it for 2 years on Telos. All those are solved problems, like how we make sure that we have backups that can instantly switch over, but never double sign with 2 signing keys. It's very solvable. All those problems are out there, and it's just linking together enough GitHub pages. Also, the problem of being able to put out nodes that are, you know, these are going to be droplets. These are going to be a droplet on, you know, on a number of services, and you just do a Docker container. It's going to be simple. Now, the reality is there are going to be a lot of people who, no matter how simple it is, don't do it. And so there's a space here, just like when master nodes, I don't even know if those are really a big thing anymore, but when they were really big in 2017 or whatever, and it was just like basically copy pasta a different master node coin. There were, you know, third-party services that they'll just run it. It's pretty easy. That's not going to be an impediment. People will discover those or run those. And none of those technical, you know, the technical problem of running like Telos block producer node is probably about 100 times higher than the technical standard for running a ETH2 node, and we have over 50 operators doing it, and the chain has never paused. So that's not going to be a long-term problem. But yeah, I mean, it's a great opportunity for people who run these services to just make it push button, and that's what'll happen.
Let's kind of move on. We're already in the enterprise kind of things, and I wanted to dive into that. So Austin, thanks for bringing it up. So how do you guys kind of see the rise of DeFi? Have you seen it play kind of a significant role in terms of how enterprises have been considering adopting Ethereum, ETH 2.0, the different products that are being built on top of Ethereum? Shailee, I see you nodding your head. How do you guys kind of view that within ConsenSys?
Yeah, we're calling it the DeFi CeFi bridge that's starting to get stronger and stronger. I do think like what's happening is DeFi is like innovating so rapidly, and they're growing, and they're all like, when can we have ETH2? We need to hurry up and have ETH2. Should we just wait and build on ETH2? Should we? I mean, they're literally just, you know, begging for it. And then, you know, and then the institutional players, you know, because of lack of returns in traditional investments due to COVID, are also looking at DeFi as another way to make money, you know. So I think there are a lot of different factors that have been causing this kind of this DeFi CeFi bridge. I see some people are also talking about that, but I think they've pushed the institutions to invest, I think.
Yeah. Austin, how do you kind of see the enterprise side of things? I know you kind of dove into it very briefly, but in terms of Ethereum 2.0 and how enterprises are kind of viewing it as a wheelhouse for adoption, do you see it as something being integrated in the future with large businesses, large companies? How do you guys kind of view that at Rivet?
Yeah, so I mean, potentially, yeah. I mean, I think there's certainly a lot of businesses out there that couldn't plausibly do something with Ethereum right now, that hopefully with the scale that gets brought to the table with ETH 2.0, it'll be a lot more feasible for businesses to say, oh yeah, blockchain, you know, that's a viable solution for me, and you know, we're just going to incorporate with ETH 2.0 over here because it's got the throughput to support us. But you know, as I was getting at earlier, you know, it may be easy enough for users to come to the table and you know, if you're staking a node, I think I heard recently that you've got to have like 60% uptime in order to be profitable with running a validator, and that's nothing. And so, yeah, I'm sure there will be plenty of people able to run a node with, you know, 90, 95, 99% uptime. But, you know, when you're at an enterprise, you're looking at 5 nines uptime, and you know, 5 nines uptime is incredibly difficult to get from you know, any kind of blockchain infrastructure, and you know, at Rivet we offer 3 nines. We're getting ready to offer 3.5 nines in a couple of weeks when we go multi-region. But it's you know, being able to get the levels of uptime, you know, I think I don't know that I see an ETH 2.0 client that's got really a path to being able to offer that with a, you know, high consistency, high availability, all of that. You know, at Rivet, we kind of reconstructed gas in order to be able to have what we considered to be an enterprise-ready client, so that we could offer the high uptime that we needed for our own project at Open Relay, and then we went on to offer our customers. But you know, it'll be interesting. You know, certainly right out of the gate. You know, when the beacon chain launches in a month or two, you know, it shouldn't be that hard to run what you need to keep up with that. But as things scale, it will be interesting to see how people rise to those challenges and figure out how to meet the demands of ETH 2.0 in an enterprise-ready, you know, with enterprise-ready clients.
Yeah. Shailee, how do you guys kind of view working with enterprises from the quorum side of things, right? And have you guys already started pitching Ethereum 2.0 to your clients? What do they think about it? Are they worried? Are they scared? Are they excited? Like, what's kind of like the point of view?
Yeah, at the enterprise level, I think there's a lot of like learning from the Pegasus engineers, and just like, what are the different phases? What do they include? What are kind of the design challenges, risks? You know, because you're looking at, they're all looking at like the resilience of, and the security, the longevity, the simplicity, all of those factors, quantum resistance, you know, these things are all kind of like questions that enterprises have about ETH 2.0, but they are feeling good about where the community is going, but they're still learning. We're all still learning. We don't know what's going to happen. You know, we'll see. But for transactions per second, I know that they think that there will be 100,000 transactions per second with roll-ups technology. So that's been a promising sign, and that we've tested some roll-ups with promising signs, not at that level yet, but definitely getting there, and that's a big thing too, right? Scalability, privacy, security, all like very, very important things. So until they start to see proof of that in ETH2, they're going to stick to private permission chains. But I think eventually settlement will happen on ETH2. I mean, that's the goal. Yeah. We'll see.
Awesome. I know we only have a few more minutes left, so I kind of want to dive into the QA and give the audience a little time to ask you guys questions. So the highest upvoted question right now is, what's going to happen to ETH Classic once 2.0 is out?
Ethereum Classic,
yeah.
As in the chain that forked off a long time ago?
Right.
So, yeah, I guess I've worked with that team fairly extensively on several occasions. Their plan is pretty much to stay the course. They're going to stay with Ethereum Classic in its current form, stay proof of work, not necessarily try to scale to the 100,000 transactions per second that ETH 2.0 is looking at. There might be somebody else who comes along with I guess similar principles to what the ETH 2.0 team brings to the table, who does something similar to what the Ethereum Classic team brings to the table, that tries to do something similar with proof of stake and ETH 2.0, but it's not going to be the Ethereum Classic team.
Okay. So I guess another add-on to that is, do you guys anticipate, this is another question from the audience, do you guys anticipate another Ethereum fork as ETH transitions to ETH 2.0? Taylor, you're nodding your head. Yeah.
Yeah, I wouldn't call it a fork though, really, because it's like we're running two chains at the same time, but one isn't actually running yet, but you can have it maybe in the future, but you can't. It'll be very interesting to see ETH2 exists between now and when ETH2 is like fully realized and operable, because I can speculate all day on like what certain players in the space may do, but I do know that if there is free money hypothetically available on the table, some party somewhere will for sure make that free money appear and take it for themselves.
And I would not be at all surprised if, there's a bunch of miners out there who have this hardware that's not going to be at all useful in the proof of stake world. They might move on to other chains, or they might decide, we're just going to keep this Ethereum thing going, proof of work, even as it migrates to Ethereum, or to proof of stake. They're going to keep the proof of work version going, and then there's the proof of stake version. I would not be at all surprised to see that. I'm not saying it's going to happen, but it certainly wouldn't shock me.
Yeah, I think that in theory, there's like this idea that like there's going to be a moment in time where like the switch is flipped, and like Ethereum as we know it now becomes ETH2, therefore that's Ethereum. But I just don't really see that happening, because we're talking about getting to the next phase of upgrades is going to be minimum 2 years. And then there's, we have to figure out the sharding, and then we have to bring the shards together, and then we have to make sure that's all operable. And then I think the theory is right now that current ETH chain that we're on will then become one of the shards of ETH2. I think that's what the plan is, but that's like, I don't know. This is crypto. I don't predict things 6 years out. Like, I don't, if you tell me that's going to happen in 6 years, I'm going to laugh. So I think that there's not going to be a moment in time where we flip, and therefore there's not going to be a moment in time where like everyone declares Ethereum, today's Ethereum, like dead, everyone like move to ETH2, you're all done. Like, I think they're just going to kind of continue to exist.
Yeah, ETH1 is going to continue to exist. The
closest sort of,
right? There's no plan to sunset ETH1.
Yeah.
Right.
But I did have the impression that there was a point where ETH1 intended to, switch over to ETH2 basically as its consensus layer.
I think that's a foggy, distant.
Right.
You look at what's happening on Bitcoin Cash right now, and there's basically a sort of a miner-led, fork or determine, to try not to have to pay some, dev fee to one guy, right? So I think it's very when you have the miners who are actually in control of ETH1, it's not surprising that they would try to hold on to that power, or try to like Taylor says, grab some cash while they can. I think that the thing that really we haven't really kind of tackled, which is interesting and people should think about, is what is the path for all these existing Ethereum apps right now that are struggling desperately under the cost of DeFi, under the cost of transactions that are driven by DeFi, but that they don't benefit from, right? And so if you're somebody who built a pilot or your ERP system or something like that, and really took the plunge and built it on Ethereum, and now you're seeing these huge prices for transactions, I think those people are going to have a year or two to wait, and thinking about like this, like the COVID vaccine, thinking about, hey, there's a vaccine, we don't need to wear masks anymore. That's just not the case, right? And so these guys are going to have to find a solution. And I think there's a few, we've pushed one on Telos called Telos EVM, which is an Ethereum virtual machine where people can upload Solidity contracts. And those guys, and these are not for DeFi. These are for people who are just running these sort of like siloed operations. I think there'll be a lot of things like that. And so this forked chain could be one of them.
Okay. I love it. Unless anybody has anything else to add, we'll wrap it up. Any last words on this topic? No? Going once? Great. So before we kind of break off into our awesome networking session, I kind of want to go around again and have all of our speakers say, where can we find you? Where can we learn more about your projects? Starting with Austin, working our way to Douglas, Shailee, and Taylor.
So where can you find me and what are my projects?
Not geolocation, but like online.
Yeah. So I guess if you go to openrelay.xyz, we have contact information for me and my company. And if you want to know about Rivet, which is the Ethereum gateway that we run, that's at rivet.cloud. And then I'll be around here. And then I'm also on a bunch of Discords and Telegrams and stuff like that where you can find me.
Awesome. Douglas?
Hey, I'm on Twitter at Douglas_Horn. That's the easiest place to find me. To learn more about Telos, you can go to telos.net. And there's a number of things, sub-pages there, like our governance engine, Telos Decide, or Telos EVM that I just mentioned, things like that. Lots of docs and stuff they can find at telos.net.
Awesome. And Shailee?
Yep. Ping me on LinkedIn or Twitter at Shailee A. Just DM me or email me through the ConsenSys email. All right.
Cool. Taylor?
The best place for day-to-day. Our product is MyCrypto, but do not go to mycrypto.com. Go to beta.mycrypto.com because it's super sweet and it has multi-account support and some DeFi stuff, and it's just way, way, way better. So beta.mycrypto.com, and then Twitter is at MyCrypto, or if you really want to get into the weeds on all of this stuff, my personal Twitter is Tavano_. But I will link all this in the chat because screw that username.
And cheers, everyone. One last cheers. Thank you so much for being on Blockchain and Booze. And before I let everyone go, you finished it. All right. Before I let everyone go, we have our amazing networking session right now where I'm going to end presentation mode, and all of us, we're going to distribute to these colorful tables, and we'll be able to bounce around from chair to chair and meet people from all over the world that are watching this right now live with us. So yes, Crispin, tables. So without further ado, make sure you have your cameras on, make sure you have your microphones on. Otherwise, you're going to be extremely confused. So cameras on, microphones on. Everyone, thank you again so much. We'll see you next week. Bye-bye.